Hello and a warm welcome to this special edition of Old Mutual Investor Insights. Now, this is where we have an opportunity to deep dive into the interim results for 2025 delivered by Old Mutual Group. I'm Gugulethu Mfuphi, and I'm joined today by the newly appointed CEO of Old Mutual Group, Jurie Strydom. Jurie, such a pleasure to have you, and thank you so much for making time.
Morning, Gugu. Good to be with you.
I'm excited to touch base with you, and I guess
Yeah.
first things first, we obviously have to take a look at the overview of the numbers. An adjusted headline earnings per share increased by 29%, and perhaps you can take us through just a quick overview of some of the key levers that have contributed to this growth.
Thanks, Gugu. Well, great to be with you. I'm in the job for just over 100 days.
Yeah.
So this is my first my first rodeo of results. So I think if you look at the earnings, a strong earnings result. You mentioned adjusted headline earnings up 29%. Results from operations was up 16%. I think both were supported by equity markets to a degree. And so I think if you look at on a sort of a more comparable basis, I think the results for operations sort of reflects a more underlying sustainable performance. I think the standout performance was from Old Mutual Insure, which was a significant turnaround in their underwriting margin from 0.9% last year to 9.7% this year. So we'll get back to that. I think other highlights for us, support from earnings to a dividend, a 9% increase in our interim dividend to 37 cents per share, and also the share buyback of 3 billion that we announced this morning. So that really demonstrates confidence in our balance sheet and in our business.
Let's talk about that share buyback, because that's been a significant contributor as well to help us gain clarity around how this capital will be allocated. What's the strategy there going forward?
One of the things that you'll see a lot from me and from us is around disciplined capital allocation, being really clear about where we spend capital and why. So we've got 3 horizons for capital allocation. We are currently in Horizon 1 by our own description, and that is where your return on net asset value is actually below your target range. So even though our RONAV came in at 15.5, if you actually adjust for the support from the equity markets, it's actually still below the range. Which is 15 to 17. So actually, in that part of the range, we will be looking to prioritize shareholder distributions, while we consider the share price to be trading favorably relative to the group equity value. And so that's where that 3 billion share buyback comes from. It doesn't mean that we won't be looking at investment opportunities to deploy capital, but those opportunities will be very tightly coupled to the 4 strategic focus areas that we've outlined, and obviously evaluated always on the merits of the economics.
You mentioned significant growth pillars, and there's about 4 of them that you've highlighted. Help us understand how this interplays with the various segments of the business. Africa operations, of course, Old Mutual Insure, which has shot the lights out, and also primarily when it comes to life and savings.
So the 4 focus areas really are around driving competitiveness in our South Africa business, and we'll talk a little about particularly about the pressure that we've got on life sales and on margins there. But that's an important focus area. I think deepening our leadership in our Southern African markets, where we've been present for many years, and we think that there's opportunity for us to get more benefits of scale there. OM Bank, establishing the right to win for OM Bank, which you've alluded to, and then the 4th one is really sort of evaluating and pivoting on growth markets. We are in a number of growth markets in East Africa, West Africa, and China. We have done a portfolio review there, have exited 1 or 2 markets like Tanzania and Nigeria, and we've put South Sudan into runoff. I think our approach there is to say we want to see the returns and the margins there turned around to justify further deployment into those growth markets. So those are kind of overview of the 4 big focus areas, and we will then be aligning all capital deployment according to those priorities, and again depending on where we are in the capital horizon. On OM Bank, which I know is a hot topic, I'm an OM Bank customer. We are now open to the public, so anyone can become an Old Mutual Bank a customer. We went live to staff in the first half of the year. We are live to the public now, increasingly in the second half as we roll out into our branches. So what we've done is we're bringing that business closer through executive oversight to Old Mutual Finance, which is a 15.5 billion rand lending business. We've got 346 branches that originate that lending. We've got almost 400,000 active money account customers. So what we're doing is we're accelerating actually the pivot to kind of leverage off those assets, and that means rolling out through our branches. Our ambition is to demonstrate traction in the second half of this year and through 2026. And then we'll also be factoring in the opportunities that there are for cost and revenue synergies from bringing the bank closer to some of the rest of our banking assets.
Let's talk about OM Bank. There's been a lot of surprise and excitement around it, especially given the significance of its rollout. 1.5 billion in deposits so far. How are you looking to remain competitive in a market like South Africa, where there are quite a few contenders within the space?
I think the convergence of banking and insurance is a kind of a theme that has been playing out in South Africa over a number of years. So I don't think the idea is new. I would say we have actually been playing in the banking space through our existing lending businesses, through our branches, through our distribution network for a number of years. So the concept of playing in that broader space is not new to us. We welcome competition. We think that Old Mutual, with our legacy of providing wise advice to people, wise counsel on their finances, more in the long-term savings and insurance side of it than on the credit side, but increasingly now opening up on credit and on banking, we think provides a very strong holistic proposition to customers.
What about Old Mutual Insure? Now, this one shot the lights out this past financial results, but given the complexities around the world of underwriting from a global point of view, the challenges we face when it comes to climate change, how are you looking to build in further levels of resilience to maintain this level of performance?
Gross written premiums up 5%, but it's really the margin turnaround that has been significant there. I think that the market itself is actually in a better place, in a much better place in the cycle, if you look at our peer group as well, than it was. And so we recognize there's an element of market cycle here, but there is also, not to be missed, an important element of operational turnaround that was not 6 months in the making, but it has been a number of years in the making in OM Insure. And that is around pricing for risk, taking into account some matters like climate change and the change in claims patterns, claims management, managing portfolios of books that are non-profitable. And some of it's very operational, but it's really those sort of nuts and bolts of competing in that market that I think all of those dials have been improved over the course of the last number of years. So we think that there's an element of sustainability also in these numbers.
Let's talk about some of your segments, and in particular, let's zone into Africa. You alluded to the fact that you have sold off some assets in markets like Tanzania. Zimbabwe, as we know, is also challenged by currency devaluations and upstreaming there. How are you positioning yourself to capitalize on growth within these markets?
So as I pointed out, there's sort of distinction between the Southern African businesses, where I think we've been around for a long time. I mean, we've been in Malawi for 70 years. We've been in Zimbabwe for many, many, many years. So I think in those markets, we are already an iconic player with an iconic brand in many of them. We need to deepen our leadership there, deepen our scale, and really manage to generate the sort of returns and margins that one can expect from these businesses. I think over the half year, RFO is up 13%, was somewhat supported by equity markets, but an encouraging RFO performance, and also pointing out the hard work of getting balance sheet optimization. And these markets, it's complex. There's lots of, each one's its own jurisdiction, its own balance sheet. So a lot of the work has gone in from the team to improve the remittances of cash out of these businesses, and the cleanup of some of these balance sheet items. So I think that's encouraging for us. Looking forward, I think we would be, as I said, in the one story in Southern Africa, to look to where's the opportunity for us to deepen scale. On the other one, we need to look at our growth markets and really make sure that we can demonstrate returns and margins there for us to deploy further capital and build further scale in some of these growth spaces.
Let's talk about life APE sales that came in just at 1%. Help us contextualize how you're looking to capitalize on growth opportunities and prospects here.
The 1% life APE is, of course, reflects quite a muted growth environment in South Africa generally, I think along with our peers. And in particular, there's been a shift away from guaranteed annuity business, which in this half, which impacts us as much as a few others. I think the pressure there is really on margin. So you would have seen the 1.3% value of new business margin. That is a key metric for us going forward, to restore that number back up to the range where we want it, which is between 2 and 3%. Now, the key levers there are, and it's quite operational in some ways, but in other ways it's highly strategic. Expenses play a significant role, and so getting expense efficiencies from our scale is key to that margin, particularly at the margin. Operational improvements to improve persistency, the quality of the business, the quality of collections, those are also things that make a significant difference to your lapse experience. And then ultimately, of course, greater sales, right? Growing market share. And so that's where it comes more into how you're competing through your different distribution channels in the market. You would have seen a a change we've made to our operating model to be a much bigger distinction between the group functions and our businesses. And the creation of the life and savings cluster is really to enable a much leaner, more focused corporate center where we focus on capital management versus in the clusters where we really are serving customers and driving businesses. And so it's our ambition that the life and savings cluster would drive that improvement in value of new business margin going forward.
Jurie, as you've mentioned, you've been in the business for just over 100 days now. I'm hoping this has given you a lot of opportunity to interact with your peers, colleagues, and mutualites across the group. But for investors, perhaps help us understand what key metrics we can hold you accountable to, especially when it comes to return on net asset value, embedded value as well, which has found itself under pressure. Are there key targets and metrics that we have identified just yet?
We are shifting to return on group equity value and cash generation as our sort of key value creation metrics. And so there's one thing that one takes away from these interims. It's that move. And what that signals is us taking very seriously two things which drive that. One is operational efficiencies that enable you to deliver margins, and the other is earning the right to deploy capital and deploying capital in a disciplined, value accretive way. And so ultimately, it's our ambition to get our return on group equity value into the range where it is above our cost of equity. And the levers to get there are the ones that I've described to you. So we are not giving the ranges themselves yet. We're having a capital markets day in Q4 where we'll give more detail, but that is certainly the direction of travel for us.
So lots to look forward to, and we certainly wish you all the best on your new journey going forward.
Thanks, Gugu. Nice to be with you.
Well, that's my conversation with Jurie Strydom, the Group CEO of Old Mutual, helping us unpack the 2025 interim financial results. There's a lot that we'll certainly look forward to in the months to come, of course, on the back of the strategic overview of the business, understanding more of the key metrics and where the growth will come from. It's been a pleasure being with you. I'm Gugulethu Mfuphi. Until next time, take care.